Well, good afternoon. Good afternoon and welcome. Welcome to another of our Webinar Wednesdays. It's great to have you along for number 46 in our Managing Your Small Business Through the Pandemic series. So good afternoon. I'm Kelly Bearden, and I am the director of the CSU Bakersfield Small Business Development Center, and I'll be your host today and also presenter. So a little bit about the Sbdc program. The Sbdc program, it's been around for about 40 years, nationwide program. In California, we have 5 regional networks. We're part of the Central California Sbdc Regional Network. So the Central California Regional Network includes the central part of California. Isn't that ironic? And that includes all the way from the south in Kern County to the north of Mono, to the Pacific Ocean, to the west and to the east of the state of Nevada. So in there are about 14 of the greatest counties you'll find, as I'm known to say. And we cover all of Kern, Inyo, and Mono counties and other centers in Clovis, Merced, Modesto, Salinas, and in San Luis Obispo. And what we'll see is that throughout the region, we provide those same services. So I think I got my microphone fixed here. And when we go. So I'm assuming if you're not hearing me right now and seeing me move my lips, please put it in the chat. Zoom's trying to tell me I have a microphone failure, of which I don't agree. Can you hear me now? Okay, we're back. Great. Gee, I was just thinking, 46 of these and we haven't had a significant glitch. And of course, about 10 minutes after I think that, there you go. So Webinar Wednesday is sponsored by a number of individuals, a number of organizations, Kern County, California, Mid-State Development, CSUB School of Business and Public Administration. We're powered by SBA and also the Governor's Office of Business and Economic. So what's new today? What's new today, January 27th, year 2021? Well, the Kern Recovers PPE program ends in 4 days. So it's basically your last shot to get in on that particular program. We have a number of things to report on the vaccine fronts and testing. And of course, we found out earlier this week, our tier system is coming back. So today we're going to get in, we're going to get into some detail of a lot of interesting things, such as the revenue reduction for PPP. There's a lot of different variables that are out there and a lot of different calculations. I know the first time I calculated revenue reduction, I did it wrong. And I'm quite proud of my math skills. So we'll get into that along with a lot of the stuff going on with venues, the shuttered venues, EIDL. We also have some more that we'll get into. So a little bit, just a quick reminder of the PPP first timers. You can get in for the first time if you passed on the initial efforts. Also, there's the second draw available, and we have a little bit of guidance that we'll get into and provide more detailed information on that. Earlier this week, the SBA acknowledged that there was issues with the portal. They had a new contractor that changed the interface for what lenders use in order to submit your applications for PPP second draw. And there have been some issues with that. We'll talk a little bit about what's going on there in case maybe you're affected by that. We'll talk a little bit about some of the information on the employer tax credit, the employer retention tax credit, and the latest from the California Relief Grant. And also, Webinar Wednesday turns 8 today, or turns 8 on Saturday, but since we didn't do Webinar Saturday, we're going to celebrate it a little bit today. We'll take your questions, so put your questions in the Q&A box afterwards. Have a lot of questions that will be available, and so questions and answers will be taken there. Try to hit the chat if you put some in there, but Q&A first and foremost, and we'll get on with our poll for today. So our poll today is going to start with, recently, I really kind of want to get your feel for what's going on with some of the pandemic programs and what your thinking is of where you're going to actually apply. So today's first poll question is going to be, I have recently applied or will likely apply for the following pandemic relief programs. And you can apply, and actually you can choose multiple choices here for the PPP second draw, the PPP first draw, the California Relief Grant, the Shuttered Venue Grant, the Employee Retention Tax Credit, or another one. We could have listed a few others, so we'll just lump those into other. And including in there is the soon to be ending Kern Recovers PPE, but multiple guesses or multiple choices are allowed in this particular question. Have you applied, or are you likely going to apply for PPP second draw, Shuttered Venue Grants, California Relief Grant, PPP first draw, Employee Retention Tax Credit, or another program? So I have about 55% of you that have voted at this time. We'll give you another couple of moments to jump in and kind of look and see where we are at that, and wind the clock down right now. Last call to get in. Recently applied or likely to apply for pandemic relief programs. It is ending. So we'll end the poll with 68% of you voting, and I will share the results, and overwhelmingly, the PPP second draw, 70% of you would like to get that second helping of PPP. Good program, $284 billion. Talk about some of the details today. And then we'll jump to the California Relief Grant, 52% of you. 28% are saying you would like to get your first PPP draw. And then also other, along with Employee Retention Tax Credit, 17%, and the Shuttered Venue Grant that we will have significant information on today, 6% of you, but maybe there's more of you that know of performing artists out there or others that would be able to benefit from that. So thank you for voting in our first poll. We'll now look to poll question number 2, our last one. And let's get a little whimsical today before we get into all this heavy content. And our question is going to be regarding Webinar Wednesday's 8th birthday. Okay, last week we mentioned on our poll question a little guess onto where Webinar Wednesday has presented live webinars from. Today it's going to be a little different. It's going to be our very first webinar topic back in 2013. It was covered by a special guest that we had over the last few months. What was that topic? Was it managing employees? We had Lorna Kibbe talk a lot about that. Selling to the government, Erica Baltazar was on. We did business planning with Melanie Saya, crowdfunding with the queen of crowdfunding, Ruth Hedges, and we had several on marketing tools. We had Claudia Newcorn, and we had Kurt Friedman talk about some marketing tools that are available. So our first one, we have 20% of you that voted. You only get to vote once on this one. Was it managing employees? Selling to the government was our very first public webinar in 2013 on business planning. Was it on crowdfunding? Marketing tools. So, okay, give you just another couple of seconds, those of you that wanted to jump in and throw that wild guess out there. We have covered it with our guest speaker. And I did make it a little bit easier for you. I could have had small business lending or SBA lending, which we've covered in many of our guest roles and guest host and guest speakers. We're going to end it right now, 46% of you, and share the results with you that say business planning, 38%, overwhelming. And that would have made a great first topic. Selling to the government. There's a lot going on selling to the government out at China Lake. In the Ridgecrest area, the China Lake Naval Weapons Station is having kind of a big event coming up online, maybe as soon as today, tomorrow. And no, that's not it on this particular case. Marketing tools was not marketing tools. It was our very last item, crowdfunding. 8% of you got it correct. Crowdfunding. And earlier we did have Ruth Hedges, the queen of crowdfunding, on. And crowdfunding was very popular in 2013. And we've had an event every year in crowdfunding. So we'll have to do one of those for 2021 until this, what I think is amazingly potential funding source for small businesses, is realized a little more further. Okay, thank you for participating, and thank you for answering the poll questions. And at this time, I just want to recognize our beautiful, and that is a real cake, That is not photoshopped with the webinar Wednesday. A happy 8th birthday. We're going to put 8 candles on it and share it during our team meeting tomorrow. Cut the cake up and just have a wonderful time in celebrations. But I wanted to thank at this time all our presenters and guest hosts, guest sponsors. We've had a lot of production assistants over the 8 years, a lot of marketing professionals that have assisted us, and many of our CSUB interns and others. And as you can see, it kind of marks today's webinar Wednesday. Happy birthday. So on to a little bit more pressing for some of you news is the vaccine. And there's a lot of vaccine news that's in the news right now. We have a list of facilities that are administering the vaccine, and the Kern County Board of Supervisors came out yesterday with a ambitious plan to turn the Kern County Fairgrounds into a vaccine location that can handle mass quantities of individuals at any given time. Literally thousands is the peak potential for that. Thousands in a day. And initially it's going to be 2,000 for this first week at the fairgrounds, and those all filled up with Monday appointments. You'll remember that for vaccines right now, it is healthcare professionals and 65 and under. Very soon, though, that's going to change, hopefully. In the governor's next phase, he has said that it is going to be, he'll be vaccinating, or vaccinations will be able and open for emergency services, those workers in food and agriculture, and education workers, which will, make my colleagues, CSU Bakersfield, pretty happy, I'm sure. So that's what's going on in the vaccine front. We'll look at some of the other things along this, but I really want to send out a congratulations to Bren Kerrigan. Bren was our guest speaker back on week 25, and it was when we actually shifted to the tier system, and we were excited then because the tier systems that we're back to now, ironically as of yesterday, we're back to the tier system, and Bren came on and very eloquently described it for us and showed the importance on how we can get our businesses open. Bren was named by the Board of Supervisors yesterday the new director of Kern County Department of Public Health. So a big congratulations out to Bren and CSU Bakersfield alumni with her bachelor's in business administration. And as I say to many of our students, interns that we work with, that bachelor's in business administration can take you a long way. And if you don't believe me, look at Bren Kerrigan. Congratulations again on that. The county is in good hands with you there. So there's our Economic Aid Act, our big 8 there. Before we go there, let's do a new share and let's go to see what we have as far as some of the websites that we can jump on. Here we have the testing sites that are available this week, and you'll see that no appointments necessary if you go to the Kern Medical Center. Testing is still important, even as we try to get this vaccine rolled out and get the herd immunity with the vaccine in order to get our businesses back and going. Things are trending in the right direction, but it's no time to let down our guard. If you have symptoms, get tested. And now that the tier system is back, like we used to say, if you even have very, very mild systems, you're helping small businesses by providing a negative test. And who knows, maybe you are one of the unlucky ones that are not systematic with the COVID. So what we're seeing there's the testing sites. Go into the English version of the Kern County Health Department and look very briefly at this. And this is something as we try to get our businesses open fully, something that's vitally important for a lot of businesses. We're starting to see some of the numbers, and we hit a kind of a milestone recently with 600 deaths in Kern County. Of that, we have 91,000 cases, which is now over 10% of the population. And Kern County has had a positive test for COVID-19. In jumping over here to the governor's blueprint, we can go over here and look and see what our status is and just kind of refresh ourselves with some of the milestones and some of the numbers. We're not going to get into that a lot today because we really have a lot of content to get into. Plus, it's a minimum of 2 or 3 weeks, but we're back at the blueprint for a safer economy, and we're back at trying to get out of the purple for many of our residents and businesses here in Kern County and throughout Central California for that matter. So back to the Economic Aid Act and some of the big 8 items in the Economic Aid Act that we saw. And second draw obviously is popular with a good number of you on the call today. And also we have the first PPP draw that's open for new firms, for nonprofits, and those that chose not to participate the first time. And those are under the initial rules for PPP 1. We also have the shuttered venues, the $15 billion grants, and we'll get into details on both second draw. We'll get into a lot of the details here on the grants. We got into a little bit of the employee retention tax credit last week to where we'll probably just touch it briefly. EIDL advance, we got into pretty detailed the new EIDL grant and the old advance, but I'm getting a lot of questions on EIDL, so we will touch into that a little bit. Eventually, we'll get into the PPP Forgiveness. We're expecting a new form, a 1-page form. 150,000 and under can participate in that. And also with the Economic Aid Act, it did prove that there was a tax deductibility for funds from PPP 1. For those that were used in 2020, used in that first PPP, for a large part of the year, we weren't authorized to actually take those against our taxes. It did not count as income. And then also the unemployment that is available for displaced independent contractors. I mentioned briefly that one of the breaking news this week has been that came out yesterday was that a new SBA contractor, their application portal was not allowing banks to submit second draw applications. And, you know, if this is something that is affecting you, go to the chat and put it in and be able to, and, you know, just if you want to acknowledge that that is something that has happened to you. But what it is it's that your second draw application has been detained, it had been held up because of basically they're doing very widespread fraud protection. One of the big issues that came out with PPP originally was that there were fictitious businesses, not those filing a fictitious business statement, just fake businesses that popped up through a website, maybe got an EIN and a lot of the other requirements, and were not real businesses that applied for PPP. So that is one of the things that's driving this. We're seeing that the second draw is also, there was a problem with the program rules because if you didn't have forgiveness of the initial loan, it was kind of a requirement of this. And it's really not a requirement. You can apply for a second PPP without having your first loan forgiven. But is one of the glitches that's happening. We're seeing that. And again, it's something that's happening. It's getting resolved. We'll have more on this next week. So if you haven't heard from your lender about your PPP and you've already applied your PPP2, it could be being held up because of this and because of this potential portal glitch. SBA had a call with national lenders, or lenders across the country, nationwide yesterday in efforts to resolve these particular issues. Okay, stimulus. And these are the Economic Aid Act programs. So we'll just cut it down a little bit to stimulus here. And these are the ones that many of these new ones are going out to those that have effectively had a drop in revenue. And again, what we're looking at is a revenue drop from 2019, pre-pandemic, to 2020 during the pandemic, and you had a revenue drop. So the four main programs that we're talking about a lot today and other days is the PPP second draw, which requires at least a 25% drop. We'll have details on that and how that is calculated and a few things such. The shuttered venues also require a 25% revenue drop, but also we'll get into what they have as far as priority access for funding for drops of up to 90% and other levels. The shuttered venues will open to those that have been devastated the most and to smaller venues. The EIDL grant, which is, not to be confused with the EIDL loan that is still open up to $150,000 qualify. You get a 30-year loan at 3.75%. It is associated with last year's EIDL advance. So those that applied for an EIDL grant, whether you an EIDL loan, and if you didn't receive the EIDL loan and you received the EIDL advance, it did not need to be repaid. And that is the portion that is looking to get stepped up to what was the maximum amount of $10,000. So the EIDL grant, but it has the 30%. There is no application process that you need to do. SBA is taking care of that for you. So they are identifying your location, and if you're in one of the tracks that meet the requirements of being 20% less as far as a household income, if you're 20%, or it says 30% there, 30%, but yeah, now I've got that confused. So we'll look into this in a little bit. It's either 20 or 30%. There are just too many of these darn percentages. And then there's the employer tax credit, which we know right now is 20%. So when doing your calculation, what you're asked is to do your computations based on gross receipts. And it's really important because some of these calculations we're finding are rather close. We're seeing people in distressed industries that might have experienced an 18 or 20% drop, or maybe they weren't in business for all 4 quarters, and we'll address that coming up next. But the tax collected or remitted, or tax collected and remitted to a taxing authority, most notably sales tax, but it could also be other types of taxes such as excise tax, or it could be the local hotel tax, whatever. So those are not to be included in gross receipts. So I really see with sales tax being a difference from one year to the next, potentially if you had a high amount of sales tax, or if sales tax laws changed or whatever. But there will also be effect on that lowering of that lowered amount will also drive a factor of that. So taxes are not to be included. Also, any corporate transactions between a domestic or foreign affiliate, not as common, but also amounts collected by another, such as a travel agent, a real estate agent, advertising agent, freight forwarder, or customs broker if you're doing exporting. So those aren't really factored into things, as is your first draw PPP loan or any EIDL advance. Those are not subject to federal income tax, and they are not included in the calculations for gross receipts. And then other items such as subcontractor costs, reimbursements, these may not be excluded from gross receipts and are included in gross receipts. So the last bullet, that is included in gross receipts, such as your subcontractor cost reimbursements for purchases, investment income, and other things. So our first question of the day, and since we are getting into a little more detail and a little more question and answer, and these are provided by SBA, but a good basis point to go over, what are the gross receipts? What are you determining eligibility? What are the gross receipts for that purpose? And for a for-profit business, it's really going to come down to what I've highlighted. It's your gross receipts, generally your sales or revenue from whatever form, whether you use an accrual or a cash basis accounting method. So from whatever source, it could be, cash, credit, whatever, etc. And includes the sales of goods or services, also your interest, your dividends, any rents that maybe you collect as part of your ongoing business, or royalties, fees, commissions, and they can be reduced by returns and allowances, but excluding any capital gains. So that is kind of what is going into that gross receipts. And we're going to kind of up with the definition first and foremost, because there are so many reference points of that 25% gross receipts reduction to qualify for the second draw PPP. So what you must be able to do is you must be able to demonstrate a 25% lower revenue in 2020 than you had in the same quarter for 2019. So what we find is if you have the entire year, you can actually show a tax return, and that is the easiest, cleanest method for moving on from this. If not, then there's for entities that were maybe under unique situations to where maybe you started your business in 2019. You could have started it in the first quarter, second quarter, third quarter, or fourth quarter. So for those that were not in business during the first and second quarter, but in operation during the third and fourth, it has to come from one of those third or fourth quarters. So you're given the third or fourth quarter. If you were not in business also in the third quarter, then you're going to have to demonstrate that that gross receipts was for the fourth quarter. It was 25% lower in 2020 from 2019. So you have a very small window compared to those that were in business, say, for several years. And then this has come up in a question the last 2 weeks, so I wanted to make sure I covered it this time. And it was for entities not in business at all during 2019, but in operation by February 15th, 2020. So in this situation, the applicant must demonstrate the gross receipts in the second, third, or fourth quarter of 2020 were at least 25% lower than the first quarter of 2020. So again, you are able to, if you open business sometime between January 1 and February 15th of 2020, there is a special rule that allows you to go back and look at your second, third, or fourth quarters for 2020. And if they were at least 25% lower than the first quarter of 2020. So hope that gets rid of that question. So what documentation do you need to provide? Well, you need to provide for loans, and then they differentiate these second draw PPP loans for 150 and over and 150 and less. But for those that are 150 and less, the borrower must provide documentation showing that you had the reduction in gross receipts. However, you must show at the time the borrower either seeks loan forgiveness or upon SBA request. SBA apparently made this rule to try to get it out a lot quicker, because being able to document each quarter, your quarterly profit and loss statements, and referencing that, or your annual sales, maybe was more problematic. And this enabled borrowers to get their applications in faster than if not. Now, if you're over 150, then you don't meet those same requirements. But 150 and under tends to be kind of a magic amount for a number of these programs. And again, the documentation that you're going to need to provide are quarterly financial statements. If the financial statements are not audited, you must sign, and you must note on each page with initials that they are correct, and they're correct even if they're not audited. You could be required to also require quarterly or monthly bank statements, depending on how relevant that is, and also submit that. And again, the last one is that IRS income tax filing, which changes a lot of things. And so what you do is you basically will do this on SBA form 2483 SD, which is the SBA form for the loan application for the second draw. We went over that a couple of weeks ago. Not going to pull it up today. So the next question is, can I document my reduction in gross receipts with income tax returns on a fiscal year that is different from a calendar year? So short answer for that is only if your fiscal year has a start date of February 1st, March 1st, or April 1st, because then that opens up a large enough window for you to use the entire year. Since we are now, this is webinar 46, we're in essentially the 46th week of the pandemic. Big ominous anniversary coming up in 6 weeks. There will be no cake. So just quickly on the PPP first-time borrowers and first-timers, we've used this slide in the past, but it's just the basic information. Just real quick, we'll brush over this. What is new is the portal had closed on 8/8. If you weren't in originally, 8/8/2020, there is more critical access, hospitals, local newspapers, other media, radio, etc., and nonprofits that can now apply for a PPP 1 or PPP first draw. It does go by the initial rules. Try to jump into the spreadsheet that we use to explain things a little bit in a few moments, go through a couple of the questions that keep popping up. And also, again, most of those rules are going to be for the first time. One of the things that'll be different are some of the expenditures. And here are those PPP costs that are now eligible for both 1 or 2. And we've talked a little bit about this, workplace modification. Really, the big one is going to be this expenditures to suppliers that are essential at the time of purchase to the recipient's current operations. Want to see a little more definition on current operations if that's a current, but it is really nice to see that SBA is acknowledged in the Treasury Department that the suppliers are a huge part of us keeping our small businesses afloat with these PPP loans, forgiven grants, hopefully. So some of the other covered expenditures can be for changing operations. If you went online and needed to do more delivery and processing and things like that. So some of those covered operating expenditures, and also if you had any vandalism expenses. So our PPP second draw provisions would jump into, again, the hardest hit businesses. But the second PPP is for anybody if you've experienced a 25% drop in those quarters, if you have 300 or fewer employees. So again, that is going to allow for 2.5 months payroll. And again, we go back to 2019, which you used for your original PPP, or 3.5 times, which we equate out to a 40% increase for those in the food and hospitality industries. So again, the payroll is going to still be 60%. You need to spend 60% to get full forgiveness. And also there's a number of set-asides that are there through rural and community lenders, and also with intentions to increase access for minority-owned businesses and underserved, and for nonprofit businesses and those with 10 or fewer employees. So we talked a little bit about what a 25% reduction looks like. The second draw from PPP2. The other things that were added to this is it simplifies your forgiveness process if you haven't done your forgiveness for PPP1. And if you haven't done your forgiveness for PPP1, you might have escaped that glitch that we went through earlier, because a lot of that seems to be tied into those that have already submitted a PPP forgiveness application to SBA, but have not received permission yet. And again, SBA is working on getting that fixed. I'm sure the contractor that they hired for that project he's had a few sleepless nights as well. So it also repealed the requirement of deducting the EIDL advance. All spring, summer, and fall, we talked about how you were going to need to, even with full PPP forgiveness from your first grant, you were going to need to repay the EIDL advance. And that was part of the Economic Aid Act that we have. And again, I am going to get to you the seasonal employers. If they just keep hammering me, if they would just quit hammering me with so much information, to go over already. So again, 60% is still the magic number. There's a little bit of confusion over how costs can be incurred. And one thing I really want to stress is that you can elect the 24-week covered period for PPP2. The forgiveness is not essential, but you need to be flexible. So you haven't had to have forgiveness at this time of application, even though the porthole is suggesting otherwise. And there are those other PPP expenditures. So, actually, let's jump into, see if I can pull up my Excel spreadsheet. That's not the one, but that is a nice spreadsheet nonetheless. And that's not it. So apparently it doesn't really want me to pull up the spreadsheet this week. So back to the PowerPoint. So one thing I was going to explain in the spreadsheet was that what you have is you have really kind of the same rules as the first. And one of the big ones is this costs are incurred over a 24-week period of time if you elect. Now, even outside of that, so if you have a PPP2 that is funded into your bank account today, that starts the clock for the next 167 days that will run till July 13th. So in this window, if you have employees that are going to be paid on Friday for their last 2 weeks of work, since that is going to be paid within now your 168-day window, today and the next 167, that is the cost that are either incurred or paid. In this case, it's paid. On the back end of things, when you get close to July 13th, you can actually pay it outside of that July 13th window. So I've been getting quite a few questions on that. I wanted to go over that and make sure that that was clear moving forward. Costs are incurred, even though it's in the 24-week window. So it's a little bit on the PPP2, or maybe a lot of bit, and also PPP1. So let's talk a little bit about the grants for shuttered venues. And I understand it's a small percentage of you, but it's a very important grant program for those of you that actually fall underneath this. And there are a lot of rules and regulations. And again, I challenge you out there, if there are a lot of nonprofit, very small venues that would fit this criteria and maybe don't know about this particular program, this would be a great program to keep our independent theatrical productions and maybe music and comedy and movie theaters and cultural institutions going. So again, briefly, 45 million is the maximum for this. 45% of your 2019 gross earned revenue. Again, that's revenue, that's not net profit. It cannot be combined with the second round of PPP, and also there's some set-asides. So there's a laundry list of who can, including talent representatives. Good lobby you got there, talent representatives. And each business entity owned by an eligible entity also that meets that requirement. Again, SBA is not accepting applications at this time. They have came up with the framework, and really I do anticipate this to open up as soon as they get past that PPP hurdle. Anytime maybe within the next week it could be open. Our timing lately, maybe it'll be opening probably about 5 minutes at the end of the webinar. So again, those that have suffered the greatest economic loss will be the first applications processed. And it's this schedule what they're using. So the first 14 days that once the grant period is open, they're going to allow those that suffered a 90% or greater revenue loss between April 1st and December 31st, 2020, due to the COVID-19 pandemic. You know, I sometimes don't mention it, but all of these need to be due to the COVID-19 pandemic, all these programs. There is still that requirement in there. So those that had a 90% or greater revenue drop are going to be allowed in the first 14 days. The second priority for the next 2-week period will be those with a 70% or greater revenue loss. Again, it's going to be that same time frame from from April 1st, December 31st. So you're going to want to look at the last 3 quarters of 19 and compare those to the last 3 quarters of 20 to see where that revenue drop is. The third priority is going to be those that suffered a 25% or greater revenue drop. And then there's going to be potential for supplemental funding available after the first and second priority. And these are going to be recipients of the first and second who suffered 70% or more. So there's going to be an opportunity for even a supplemental, almost like a shuttered venue priority second draw. So again, the first priority is just an example there. Here's my example that I'll show you is you have 10 employees, $200,000 was your revenue for 2019 for the last 3 quarters of the year on the calendar year. And if your revenue for 2020 dropped all the way down to 20%, that shows the 10%, which would make you eligible for the first. And also coming out is also along the lines of the usage of funds for this particular program. And despite the little dot there, the little bullet, you can use payroll cost. Payroll costs are probably incurred and encouraged, and also rent payments. You can use utility payments, scheduled mortgage payments, but they do specify that there are no prepayments for the principal that are allowed for these use of funds. You can pay scheduled other debt payments. So in addition to mortgage payments, if you had other debt that was in place prior to February 15th, 2020, you can use that. You can use it for worker protection expenditures to keep your employees safe as we hopefully move out of this. And then also payments to independent contractors. And again, the independent contractors are going to be subjected to the same rules that we have for payroll for the PPP, and that's up to $100,000 in annual compensation. So those are the allowable uses of funds. They are not going to be allowed to be used against any other COVID-19 funding source. So if you received maybe a BCARES grant and you're using your funds up for that, or you're using some other uses of funds, your PPP 1, for example, you won't be able to get a PPP 2 if you go for the venue. Yeah, it's in the vineyard this week. So there you go. There's a little bit on the allowable uses of fund, and no double dipping. Some of the other costs, other extraordinary or ordinary, they could be extraordinary as well. Necessary business expenses, as long as they're ordinary and necessary, including maintenance cost, administrative cost. Some of your state and local taxes and fees are eligible for this particular program. Leases that were into effect, everything goes back to February 15th on that. And also any insurance payments, advertising, production, or anything along those lines. We did mention the targeted EIDL advance. So the targeted EIDL advance is, again, if your business is located in the low income community, you don't have to do anything. You cannot employ more than 300 people, and you needed that 30% drop. And again, this is going to be up to $10,000. If you receive $10,000 already, then you are at the max. You will not be receiving any further award. This is for those that have received between $1,000 and $9,000. We'll see about if you didn't receive any, because there's a number of people that have contacted me and said, hey, I got an EIDL loan, but I never received an EIDL advance. So I do not know if they're going to go back and since you did receive the EIDL loan for up to $150,000, or if you were really early back in March, up to $500,000. So again, this was the EIDL advance that was part of the money, the goal to get money into people's hands in order to try to keep them going until they received an EIDL loan or money for them to keep if they did not receive that EIDL loan. They do have it's suggested record keeping requirements. And this gets back to the SVO grant, which is the shuttered venues. We also call it the Save Our Stages, but the Shuttered Venue Grant Program. There's a little bit on record retention. I guess I should have had that a couple slides earlier. As for additional information, we encourage you to email SBA. You can also go to the Save Our Stages website or continue to view webinar Wednesday. Okay. And SBA, for both PPP and all of their programs, they're encouraging you to look and make sure that the email address you are providing any personal or financial information is an official government email address that ends in .gov, and in this case at sba.gov. Apparently there's some at sba.go or even some email addresses that don't even try to differentiate being close to SBA here that are trying to get your financial information. Don't let it happen. Okay, so there's your targeted EIDL advance. We've touched on that, I think, enough for today. The low income community is again the 80% of the statewide median income, which brings us now to California, the Relief Grant Program. A number of you were interested in this. And I'll tell you, we've started to see a lot of the notifications come out. And again, first of all, we had our first period that ran from December 30th through Wednesday the 13th. If for some reason you didn't get in and you want to get in, the next period is going to open up on February 2nd through the 8th. We're encouraging you for preliminary information and just general information on the program to see our on-demand webinar, which is on our CSUB Sbdc YouTube channel. So you can go see that. And there, the grant amounts, 5, 15, and 25, depending on sales up to 2.5 million. But just now going back before we hit the last of the retention, employee retention job credit, is what we're seeing a lot of the California relief grant programs come back. People are starting to get an email now saying they're waitlisted. We've had a few that have actually been approved. Congratulations. And the funding is going to take place over a 45 to 60-day window. There'll be other documentation that you'll need to upload into the file if you are accepted. If not, you'll be waitlisted and you do not need to put another application in. So you will be available for round 2 and do not need to actually put that application in that second period. So if you're was ineligible, if your application had some serious issues or anything along those lines, you might have received an email saying that was the case, that you were ineligible or lacked substantial information in order to assist them with a decision on your grant. So the first allocation of $237.5 million is going out right now, and then there's another $237 million that'll be going out for the second round. Really, those that don't really qualify for the PPP second helping, the employee retention tax credit is really kind of it's a new improved program, and it is really something that we're talking about now, whereas the program was around all of last year, and I think we mentioned it on maybe 1 or 2 webinars. And that was because if you had a PPP 1, you could not actually use the employee retention tax credit. The employee retention tax credit, its origin originally was to assist firms that actually were either too big for the PPP, they needed over $10 million, or they had over 500 employees, or they didn't meet some of the eligibility requirements, whatever it was. And so they kind of made that available to more of your medium-sized firms. So what happened with the originally, they call it the Taxpayer Certainty and Disaster Relief Act of 2020 from the IRS standpoint, they amended and they extended the employee retention credit. And now it's a real viable program. What it'll do is do a number of different things. It'll allow you to take 60% up to $10,000 in wages paid by an eligible employer whose business has been financially impacted by COVID. So the maximum that you can take is $14,000 per employee. Goes through mid-year this year. It could be expanded off of that, but right now it goes through mid-year. And also you must have experienced a decline of 20% or more in sales. And again, there's an employee cap of 500. Before this, it was really tight. The employee cap was 100. And also you had to show a 50% drop in the same quarter compared to 20% now. So a little bit more on that. And there's your one-page sheet on some of the things that are available. We touched on all those. Under other expenditures, extended payroll tax credits for paid family and sick leave. We had the direct payments that many of you saw for $600 per. And those are things that don't kind of crack our top 8 of the Economic Aid Act. Forgiveness, get into forgiveness later, get into tax aspects sometime soon. SBA's lending enhancement programs are going to continue. We're going to be back next week with our special guest, Deanna Blaze from Valley Strong Credit Union, very active lender, not only in Kern County, but in other areas, and get her idea on what's going on with the portal and other things. So, but now it's time to maybe jump to some of your questions. And I'm going to actually remember to do this time and read your questions that you emailed me in advance, like I really want you to do. So the first one was regarding if the covered period was the same for PPP2 as it is for 1, and that is yes. I kind of went over that. I'd hope to go over that in our spreadsheet that we'll have next week, maybe the week after. The start date of the loan is going to be when you receive those funds. We kind of covered that, so jumped into that at that time. And there's another question that really hadn't come up in a long time, or really maybe never at all. And that is, during your 24-week covered period, if you elect it, can you stagger? Can you pay employees at a different rate? And yes, during that 24-week period, it is wide open. And you can try to use, from a cash flow perspective, maybe some cash flow from your business if it's coming in a little bit, and maybe to try to make it last as long as possible during the 24-week. Maybe take a half of your employees' wages over that period of time. So there's a great deal of flexibility. Again, it doesn't come down to the accounting aspect of when it comes down to that 24-week period and when you incurred those expenditures. And if you're in your 160-day 24-week period, you can actually take them then. Some of the other questions that we have is there a time frame to use the grant money? And by this, I'm thinking it's the California, and I think it could apply to a lot of different programs, going back to the California Relief Grant. And there is not a time frame that I am aware of that I have seen in that particular. And the same is true with the EIDL grant. I haven't seen a specific time frame. Most people need the money and they use it right away. And by demonstrating that you've had a loss or a drop in your particular business, then that is the case that kind of happens there. As I shuffle through the papers here, this is an interesting thing that came up from my colleague in San Luis Obispo, Judy Mahan. And she had mentioned that this is kind of a unique situation, but one that probably should warn you about if it's happened. She had a particular borrower, a client of the Sbdc in San Luis Obispo, that used a fintech company. I won't name the fintech company, but it's a big one and notable one. And what happened was the client accidentally submitted January through June. So they submitted a 26-week period for calculations on how big their PPP was. So what happened was that was caught during the forgiveness process, and they found out that 16,000 of their loan was overstated. They received a PPP that was too big, and that is not going to be forgiven. And so if there's a clerical error, it's one thing to really catch, because if your lender doesn't catch it, you're going to be the one that's responsible for it as you jump into these second draws. So keep that in mind as we move along. Another question comes from those with idle loans, and the idle loans, the question was, we were asked recently to provide a board resolution that includes a statement that we held a board meeting, and then there was a resolution that authorized the corporation to borrow. That is very consistent with SBA lending for corporations and other entities, to where you actually have the entity that the loan is being made to, and it really needs to be the entity that approves that, corporation, LLC, whatever. So that is common, and I think SBA is trying to catch up with the millions of idle loans that they issued. And also, we're seeing that in some of those cases, they're being asked to submit liability insurance also. So if you get that, don't be too alarmed that is the case, and that is what is happening. So next question is, our company received a PPP EIDL and EIDL advance. Can we apply for a second round of EIDL? At this time, no. EIDL is only open for first draw individuals. It is still open if you haven't received an EIDL loan. Again, we mentioned the terms earlier. EIDL was set to expire at the end of the year, and it was extended into 12/31/2021. And at that time, it will expire then. There's plenty of funds, it sounds like, in it. I haven't looked recently or haven't seen how much is available actually in EIDL, but what it's telling us is that there is money for the economic injury disaster loan that you apply through the SBA portal. Okay, now jumping into your questions, of which I'm going to have to stop my share in order to get in here, for which I don't know why. Okay, first question, starting right at the top before we started. Maybe I answered it, maybe I didn't. Accounting cash basis. PPP loan from the first round has not been forgiven at 12/31. Can this show as a payable at the end of the year? That is an accounting question. And my days as an accountant are decades old and long gone. So I don't feel comfortable answering that question. So the question is, though, for those of you that have an unforgiven loan at the end of the year, should it be listed as a payable? And, you know, I think it comes down to, at least if it's my business, and before I ask for better financial advice, I would ask if it is expected to be forgiven. If it is expected to be forgiven, I don't really see it as, or the company shouldn't see it as a liability. I think at the end of the year, you should be able to figure out what is going to be, what you expect to be forgiven and what you expect to not be forgiven. And if it was my business, what I would do, absence of getting reliable financial advice, would be to maybe book as a liability the portion that you expect not to be forgiven. Okay, that's my freelance accounting advice for today, and that's what I would do. Can you apply for PPP if you're getting unemployment? Boy, you know, that question came up a lot during PPP 1, which seems to be about, 45 weeks ago when that started. So my question would be, I believe you can, if you can demonstrate that, but I think in your gross receipts, you're going to need to include the unemployment. We don't have guidance on that yet, but I would expect that to be part of your gross revenues. So if you've been receiving unemployment, I would think that would count toward revenues. And then you have the whole 25% reduction for PPP 2, if that's what you're asking. If it's PPP 1, that is something that they're going to be providing further guidance on as well. What types of programs are available for nonprofit organizations? Well, nonprofit, depending on what subchapter of the IRS code you are. If you're subchapter C3, you were already able to apply for PPP 1 and EIDL and some of the others. For the next round that we're talking about today, nonprofits C6s were added, and there probably are some others that are available. So it depends on your nonprofit status and organization. But as far as you're now eligible for PPP2, the California Relief Grant you were eligible for, potentially an EIDL loan. You were eligible initially for at least C3s were for EIDL loans, which also would have included an EIDL advance at the time. Shuttered venues, you can apply as a nonprofit for if you have a venue, a nonprofit venue, say a theatrical production or et cetera, like we discussed earlier. So those are some of the things that you can. Is the shuttered door money forgivable, or is it a loan to be repaid? That is a grant. So that is going to be forgiven, and it is going to be, as long as it's used within the proper uses, you have the proper uses. Again, that's grant money, but it's got to be used the right way. The same thing as the PPP1. And one of the things, again, we talked about, I think last week, was that if you did not use your PPP1 money, you could run into a problem, or use all of your PPP1 money. And I'm running into such situations to where it's not good, because, you know, businesses have been shuttered so long they couldn't use all their PPP1 money and really need that second draw. And the time has run out of their covered period to use the rest of the PPP first draw. So I kind of got off there on a tangent, but I think you got the gist of that. If I received the PPP1 draw, first draw, but I deducted my EIDL from my PPP, can I receive the remaining back from PPP1 draw? So to get that, to kind of just preface that, originally we were under the assumption, and people, many clients have actually applied for PPP first draw forgiveness. And when they applied for PPP first draw forgiveness, at that time, the EIDL advance was considered to be deducted from the PPP1 and was unforgiven, and they either could pay it off at that time or actually turn that into a 2 or 5 year loan at 1%, which is the terms for the unforgiven amounts. So with that is, we don't know. We don't know. We don't know if you can get that money back, or if the loan is going to be rescinded if you actually had a note drawn on that. More guidance will come as we get on down the road, and some of the rules become more known, and that becomes the way it is. Next question is, we have not submitted forgiveness for PPP1. And the new rules for PPP forgiveness, such as being able to deduct other expenditures like PPE, you know, maybe outdoor tables if you're a restaurant, plexiglass. Is that correct, or is that for brand new PPP1 forgivable loans given out in 2021? Yes, that is my understanding to be correct, that there are more expenditures for forgiveness for those that received the original PPP grant back in, or PPP forgivable loan back in 2020. So for that particular reason, those are, we touched on those a little bit today. So those are now there. If you receive Shutter, the shuttered grants, are you ineligible for Save Our Stages relief funds through the NIVA? You know, I think that if you received funds, my answer to this is that there'll be more guidance on this, and I would trust the official guidance, even though I think I have a pretty good answer on this, at least from my perspective. My perspective on that is, when you go back to, and we spent a long time today talking about gross receipts, is I think that you would need to include in gross receipts any grant funds you received from Save Our Stages relief funds. So if the NIVA, nonprofit for this particular purpose, and actually for Save Our Stages, if you received, I don't think you'll be ineligible. I think you will just have to count the monies you received as gross receipts. But again, there will be guidance on this when this all comes out and before it opens. But that would be my guess as of today, January 27th, 2021. How do you apply for the employee retention tax credit? You can't apply now because IRS is coming up with final rules. It's one thing to keep checking back either with the IRS website or Google it until more or less the final rules are determined on this. So right now, we don't have final rules, and those will come not from the SBA like much of our other guidance, but they'll come from the Internal Revenue Service. If you haven't received an email, do you need to reapply? And I think that's for the California Relief Grant. The California Relief Grant had mentioned that they will be sending emails out till at least January 31st. So if you have not received an email yet, if you haven't received an email by, I would say February 1st, what I would do is I would try to contact Lindustry. Lindustry was the platform that actually did the over 300,000 California state grants. Yes, that total was over 300,000. And I think that what you would do is if you hadn't received an email by the time the second period opened, I would reapply, or I would check with them to see if there is something wrong with your application that you need to fix. I would actually check to see if you could fix your application before I would reapply. If you had a reduction of 20% in a 2020 quarter, but did not have the 20% annual reduction, can you apply for PPP2? And actually you need the 25%, but again, it can be for any quarter. If you had at least a 25% reduction for any of the 4 quarters, if you were in business all 4 quarters in 2019. If not, if you were in business only the last, say, 2 quarters, it's only those last 2 quarters that you can actually go back and try to apply. Okay, moving along on some of these questions and answers from the question and answer box. If an employer pays annual payroll, can they apply for PPP 1 or 2? Let me go back through that one. If an employer pays annual payroll, so annual payroll, so I'm guessing that's maybe like a, I'm guessing that's maybe like, you know, an independent contractor whose your annual income just shows up on a tax return. And the answer to that is if you have taxable income that you've reported on a tax return, then yes. So a sole proprietor or even other forms, legal forms of entity, if you have income that is maybe you take draws during the year, or maybe you just take an annual draw, as this case might be. But it goes back to the tax return, and you're basically afforded 2.5 months of your annual net income off your 2019 tax return. So we use net sales minus sales tax to determine a 25% loss. You know, that is really something that I'm going to address in the spreadsheet next week. And the reason is I wanted to get to it this week is because there will be subtle differences, and people that are close to that 25% mark, you know, it could make a difference if you have subtle differences along that and maybe different items that were taxable. So I believe you can use net sales or either way, but you know, let's answer that in more detail next week. Is an Sbdc advisor available to advise appropriate programs to specific businesses? And yes, the Small Business Development Center advisors are quite busy right now throughout the region that I had mentioned. So if you're located in Kern or Mono County, you can contact us at CSUB Sbdc, or you can just look at the Central California region if you're in the Central California region and actually sign up for services and meet with a consultant. And next question is, it's a little bit long, and I don't do well with long questions. It's that male pattern ADD. But I am a nonprofit C3 with real estate. I've had my nonprofit since 2017, but did not get authorized for C3 from the IRS until January 2020. I haven't made any sales or purchases since then. Are there programs to help that? That is rather specific. If you want to send me that in an email to Bearden, as anybody else can as well, Bearden, like a bear in a den, and someplace where it looks like I should be right now, at csub.edu. And I will try to address that for you. That's very specific. And when you start getting into January 2020, and our charge at the Sbdc is generally for for-profit businesses, but there's a pandemic going on and we'll help anybody anywhere. So that's it for the question box. Let's cruise over and see if there's anything in chat. And yes, there's questions in chat. And I'm so glad we got the audio back. That's good. Thank you for putting that in the chat. All the presentations, one thing that we try to mention, and Maureen, thank you for putting this in here. And there's a lot of good information in the chat box that Maureen puts in. You can get that. Most of those questions are answered there. Let's see if there's anything else in here. And no, but if you want more information, okay, well, there's one. To show a 25% or more reduction in revenue, is it gross receipts or gross profit? It's going to go to gross receipts, and it's going to be that calculation that we showed earlier, those kind of unique situations. It's kind of buried in an SBA code, but it is in the gross receipts, not gross profit. Gross profit, you will recall, is going to be your gross receipts minus your cost of goods sold. So gross receipts, and then how it's calculated gross receipts is some of the examples that we gave earlier. Here's another question regarding annual income. What if a corporation and director pays themselves once a year due to the pandemic? Can the corporation apply for the first draw PPP? My answer is going to be yes, I would think. Again, this sounds like a for-profit business. And again, it's going to come down to what you show as far as income. If you don't have employees, or if you are like an LLC single member where you're the only employee, then it's going to come down to the income that business generated in 2019 times 2.5 months of the 12 months, up to $100,000. I know, sound confusing. I sounded confusing when I said it. So again, that's income based on 2.5 months of the 12-month year for 2019, up to $100,000, which is a maximum of $20,833 if you elect the 24-week covered period, which you are entitled to. Okay, one more question here. Here we go. We have forgiveness for all but the EIDL advance. How do we get the forgiven since they've changed the rules? So if you receive the forgiveness and the EIDL advance, well, we expect news on that because that's affected a lot of people. A lot of people got PPP forgiveness, and the EIDL advance at one time was to be considered to be paid back if you received a PPP. And that is just not the case now with the change in law from the Economic Aid Act. Okay, so I think that we're about ready to put a wrap on this thing today. So come back next week. We'll be back for number 47, hopefully. Managing your small business through the pandemic. Contact me with questions if you have them. I'll do my best to get to you. Our special guest again is going to be Deanna Blaze, Valley Strong Credit Union. Look forward to next week. Thank you all for attending, and have a great week, and we will see you soon. Bye-bye now.